Hello guys, glad to have you on board again today. We're going to make that video and trying to see if this one is going to work out, because I've been having quite some troubles lately. Let's say the previous couple of days I was unable to record those videos during because of the audio crackles that is causing the audio feed and the video feed to delay, and it can go up to 10 seconds sometimes, and it's really unable to put out some educational content out of this when audio and video is delayed. So I'm trying hard to figure out what the hell is that problem and how to solve it in a durable way. But for now, I've been unable to find a solution, which means that this is the reason I wasn't posting yesterday and the day right before. And so I'll hope today is going to work fine. Otherwise, we'll have to think about other solution, and might be YouTube in the meantime until we figure this out. Anyway, today I got something else I wanted to share with you. I've been working on this for quite some time lately. It is a possible update I have in mind regarding sine wave. But before doing it, I would have liked to have your reviews, so because it's early stage development right now, and before getting any further, and this is going to take quite some time to do it, I just don't want to waste that time and make sure that you guys are feeling it that way too. Otherwise, I'll just stop here and not losing my time and yours in the meantime. So what you have right now is what could be the potential next version of sine wave, which could actually be a multi-time frame sine wave that will give you an advantage that will be not necessarily having to check the context first, meaning that you'll be able to trade on a single chart, not necessarily having to have a look at, for example, the daily chart time frame whenever you trade in 2 hours, because you basically have the context right in the same chart with that multi-time frame feature. Okay, so for now you don't yet have the algorithm that is detecting weak bullish cycles, taking profit, weak bearish, exit, bullish, bearish. Okay, you only have lines in here for now. But of course, this is why I'm asking you guys. If you say, okay, this is interesting, I want to see that pull through, then I'll get to this and I'll put the algorithm on those lines and detect the cycles just like I did before. Okay, but it's just that it's going to be very time consuming doing it. So before jumping in or getting any further, I'd like to have your reviews first. So the way we'll do it is basically that whenever you get to publishing in ID, so what you guys will see actually is something like that. Meaning that you'll get there and you'll have the comments below in here, and you can actually put a +1 in here. You say agree. Okay, so I'm going to post 2 comments. One saying, okay, Phil, go ahead, this is pretty wicked, I want to see that out. Or no, Phil, this is too confusing, keep it the old way, I liked it that way, don't go too complicated. And you basically vote that way. You put a +1 into either yes or no answers. And if you put a no answer, I'd like to have you posting a reply. You can reply and telling me why. Okay, I'm pretty much interested to know what might be disappointing you in that thing. So anyway, now let's just get to using it, because it's basically not changing a lot, not changing at all actually. It's just the same way you will be used sine waves, just that you have 2 informations in a single chart, meaning that you'll trade the current cycle regarding the overall and main cycle. Okay, let's say for example in here the algorithm will probably put out a weak bullish cycle. So let's take a quick example. We're going to use the replay function. I kind of like that one. Let's say, for example, yeah, how would we have traded that thing in here, okay? So let's set things straight. We're on a bearish cycle, so we're trying to find a bearish confirmation cycle, okay? So we still don't know what's about to come. Well, all we know for now is that right here, we've got a new cycle, new bearish cycle, okay? See, right there. We switched, and that cycle was told us to be weak bearish. So weak bearish is cool, okay? At that point, you try to short. So in here, there was a first short entry, but at that point, that short entry needs to be at break even, okay? So we put the play button. What we would have done basically is shorting right here whenever we had the bearish confirmation. Still needs to be validated by momentum, okay? You don't trade out of just sine wave. So in here you got both sine wave and momentum on a bearish trend. So you get there, you can trade short, and right now you should be at break even. Now let's put the play button. Okay. Okay, you stopped out. So your break even stop loss has been taken down. And now you are into a taking profit cycle. Okay, so right now we identified the first previous resistance. This one's already got tested. So we get back in time. We've got another resistance in here. This is the one we'll try to trade. We'll wait to have a signal. Wait to have bear okay on momentum. For now we have nothing. So we wait for the price to get there and we'll see if we do have a momentum confirmation. Okay, working around the previous resistance. Okay, here we go. The price is tested. We've got bearish okay. You trade short. Take a short entry. Purely respecting the strategy. Still the same thing. But you're trading a taking profit bearish cycle. It's a taking profit bearish combination. So you do use the taking profit, but you will keep that trade as you are in an overall bearish trend. Okay, the major cycle is bearish. So what you'll do is you're going to secure that trade whenever you get to the next bullish cycle. Okay, so basically for now you're waiting. We're going to go slightly further. No, not yet. Okay, there we are. See, the cycle just switched. Now we're in bullish cycle. So now that we are in a bullish cycle, confirmed by the momentum, what do? Put the stop loss at break even. Okay, so now stop loss is at break even, the trade is secured. So there's no risk of loss anymore, just a gain. Okay, we're breaking down the bullish cycle. So that's cool, not breaking it down, but we had a bullish cycle, a double bullish signal in here, and we went further below, which means the bears are slightly getting control. Oh, sorry, we missed something in here. Because the cycle was plotted behind, okay? So in here we switch to bearish. Bearish in a bearish cycle. What do? You put some more leverage in here. You've got the divergent confirmation, so you got everything you needed to trade short in here. So first shot in here failed, stopped at break even. Second short, pretty fine. Now we are at break even right now. We're taking a little bit more risk by putting some more leverage in here. Stop loss is still set there. Now we're having the next weak bullish cycle. We're waiting to having momentum confirmation to lower the stop loss. Right here, bullish okay on a weak bullish cycle. So right now stop is set right here. Okay, so this is stop win. If we get there, this position is set, is stopped at break even. This one is in a stop win. The stop loss is set right here. We keep on going. Still into the weak bullish cycle. Waiting. Okay, now we switch to bearish. Okay, so once again, that trade clearly visible in here. Momentum confirmation. Switching to bearish cycle. One more trade in here. Bearish trade. Okay, so third bearish entry. Same thing. We wait for the next bullish cycle. Okay, still on the bearish cycle. Right here, we went to bullish. That cycle probably would have been detected as a taking profit. So what do when you have this? You wait to have momentum confirmation. Whenever you have bull okay in there, all right, pure and simple. You're on support level. You've got bullish confirmation from momentum out of a taking profit signal. What do you do here? You take 50% of all your nice gains. So right here, you cash in, all right? This is how you play it. It's just how you would normally trade sine wave and momentum. It's really that simple, okay? So how would you play the current market in a 10-second to use it in a real-time market, okay? So right now, we're on weak bullish in bullish. So what do? it's either we go there trying to find that bullish cycle on a deeper retracement, and we're going to break down that weak bullish to find that support area, or the bullish cycle is working out, breaking the resistance, and in that point we're going to get to the bearish cluster. Okay, so actually that recording into TradingView didn't work at all. Just as usual, many crackles and audio video is delayed. So I'm gonna post that video on YouTube, and I strongly invite you guys to let's say subscribe to the channel. So I'm gonna tell you how this works out. So whenever you get to the YouTube channel, let's say I'm gonna get to my own channel and I'm going to do it in here. So this is what the channel will look like. So I'm going to create a playlist just for you guys. So I'm going to call that the English reviews. Okay, let's call it that way. And we'll be making both the crypto review and the global asset review inside a single thing. Okay, but there you'll find it. Okay, I'm going to create that playlist, and I'm going to place it right there. So there you'll have your playlist. Okay, so in here you'll be able normally to subscribe to the YouTube channel. So I strongly invite you guys to do it. And whenever you subscribe, right next to this you'll find a little bell signal, quite like this. It will tell you if you want to receive notifications or not upon uploading new videos. So that's up to you. You choose if you want it or not. But if you click on that little bell button, then you will have you will receive notifications upon uploading of new videos. And I only upload 2 videos a day. One for the French users, so the one you won't have to care about, and one for you in English, and that's basically one useless video and one useful video for you, and that's all I post on a daily basis. Okay, no more than that, so you won't be notified 10 times a day at all. So this is how this will be. Until further notice, this is where how we'll do it. So as I was unable to pull this out on TradingView today regarding the poll, the polling, whether you want to keep it the old way with sine wave or the multi-time frame sine wave is exciting you, then you just tell me this. Let's just pick up a random video in here. Let's say, for example, this is the intraday briefing I've been making today.
Allez, bonjour à toutes et à tous, ravi de vous.
Okay, so it's in French. So this is how we'll do it. I'm going to post a comment below that video when it will be uploaded, and you basically get to vote with thumbs up or thumbs down if you are up to updates, or if you think it was better the old way. And of course you can put some replies in here to let me know why you've been choosing one or another of those answers. So this is how it goes. This is how we'll do it. So I just made the crypto review right now, and I'll be making the global asset review right now. So if we get to analyzing the global assets, it's still oscillating around there. Okay, everything is about the SPX 500 and the VIX. So let's set things straight. This is what this will look like whenever I will be putting the algorithm there. So right now we will be in a taking profit major cycle, probably even an exit to set things straight. It will be taking profit or exit. I don't really know what the algorithm will pick out there. Probably an exit, but I would like to say taking profit just to be sure. That's at least taking profit, at best an exit cycle. So either way, it's a cycle where the bulls are probably going to exit. But we are in a bearish right now, okay? As we made new lows, and we are oscillating below right here. So that cycle is triggered bearish. And so bearish on a taking profit exit is definitely the kind of cycle you want to trade. If you have a look at the 2-hour chart time frame, we've already made the bearish engulfing. So I think now we have it. Taking profit, pattern on momentum, bearish engulfing. I think this is game over for the SPX right now. We're bearish on the taking profit. I think the bulls are out, and that thing is terminated. So today I'd like to see the price retracing back to yesterday's support, obviously going to break it down. I'd like to see that. If we have a look at this on a cash perspective, so from 9 a.m. to 4 p.m. In US time zone, this is what it looks like. Okay, I want to see the price opening at the exact same level today. Okay, so we are 27.53. I'd like to see the price retracing back to 27.48 right at the open, and I'd like to see a bearish day today, getting to support, breaking it down, filling the gap. If we go there today, I think this is a won battle for the bears. I think we will have done quite an interesting job. It's basically that we will reintegrate the previous range, fill the gap, and killing anything that the bullish guys have been trying to install in here. If we go to fill that gap, makes a bearish exhaustion gap. Okay, so it's trying to get up, trying to create an acceleration gap. Above a resistance, failing it is a selling signal, clear selling signal. So we'll fill that gap, probably fill that one in a row, probably tomorrow, and we'll terminate with a pretty nice bearish week. And this is what I'd like to see, because as you can see, the bulls think they won it. They made a pretty good job on next week, but as you can see, it's just that if we get to close there during next week, during that week, if we go all the way down all the week, then we'll have simply neutralized that candle, and we'll get to bearish trend, I think, in the end. Okay, so this is what I'd like to see during that week: the price going all the way down, filling the first gap, filling the second gap, and trying to close there during the end of that week. If we go to close there on Friday, probably going to have a bearish next week, almost 70%. I bet. So 70 to 30% chances. If we do that that week, we're gonna have a nasty bearish week coming right after. So today will be important. We're working heavy resistances. We've been filling the gap we've been talking about for quite some time. So I think that if that market is bearish, this is where the bears should show some strength. Okay, we have to hold on to our prices right now, not letting a single chance for the bulls to go further away. Okay, we need to stop there and fuck them up. It's just that we went up there to fill the gap, and once filled, the bears still have it in control, going bearish, end of the game. This is what I'd like to see right now in the prices. Okay, so still being cautious right now, but normally I'd like to see bearish triggering on the US equities, gold triggering by breaking that resistance and make things simple. Wave 1, wave 2, we've got a big wave 3 that's going to break all the resistances. We're going to break this, so break this one, probably break this one as well. I don't see much of a resistance in here, but probably going to have a partial taking profit. Consider this as being a range area. So for now, you will need to apply the range strategy until further notice. So what you'd like to do is this, okay? Going in there, buying into the blue area. This is what we're currently doing. So we're buying that blue area. This is why I've been buying. Buying in the blue, plotting a stop loss below the previous low. The objective is to getting into the dump zone, okay? This is where the dump zone is. So you don't trade in here. Okay, this is dump zone. Don't trade there. Probably going to take partial profits in here if you may. Taking profit number 1, taking profit number 2, and still targeting very nice extension whenever we'll do it. But we'll have to do it with waves, okay? It's not going all the way up. We're not going to do this, okay? We have to respect waves structures. So the way I see it is probably going to find taking profit number 1 in here, okay? Or probably in here. I think probably in there. Then we're tracing back into the dump zone. Generally, we do half the dump zone, and then we'll have the 5th bullish impulse. Okay, this is how I see things in that way. But with a very brutal and violent wave 5, probably going to kill all the bullish guys in the equities. They will put their money inside the gold, getting into safe areas brutally as the equities will fall apart. Okay, so consider it that way. In terms of timing, wave 3 first, equities start to fall, but not falling apart. And in here, equities absolutely falling apart. Gold is exploding. And in here, selling the gold to buy equities. Okay? I remember that. Equities are not bearish for now. It's just we're daily bearish, but weekly is still bullish. So the weekly supports will have to be eventually considered at buy entries, which means don't sell for a bear market right now. It's not going to be the case. We're going to range first, eventually. Of course, no buying if we don't have buy signals. Okay, we're not buying eyes closed. We need to have signals, but we'll see that right in time. It's not for today, so we'll be patient regarding this. The problem is the VIX. We're making new lows on the VIX, absolutely stupid lows. We've been reaching out to 11. Let's say we've went below 12. This is absolutely abnormal. We've got nothing to do in here. I think this is game over as well for the VIX. At some point, we're going to fuck up some bears in here. I don't see how we can do any different than that. So VIX, big problem right now at 12.1. We're totally out of nothing normal. So it's going to be problematic right now. I think this is the perfect timing. If you don't have VIX in your portfolio, this is the time to buy it. It's pretty much cheap. We're not going to get to 10. It's not going to happen. Or at least if it happens, you have far less to lose than what you could get. Because I think we're heading toward 30 and probably even more than that. So really being cautious in here, being patient, but really to me, buying VIX, selling SPX, buying gold is the obvious scenario to come during the summer. But we'll see if I'm right or wrong. Once again, if I'm wrong, I'm not going to lose that much. If I'm right, I'm going to get any beautiful amount of money in return. So that's how it plays out. Now, regarding the other assets, regarding the current quarter that we've been talking about with the junk bonds, okay? Junk bonds have been breaking supports. They're trying to break resistances right now, but anytime we get back to support, it's the end of the game. We're overbought. Below resistance, probably going to sell today on the junk bonds. And if junk bonds are sold, how the hell do you want the equities to go up? Okay, so let's set things straight. What is exhausting? What is making Wall Street happy and confident that this thing is going to last forever? Because we got the Russell to historical highs. Yeah, it's pretty nasty. And we got the Nasdaq as well. But guess what? If Nasdaq is doing double top structure, nasty things are down the road. Russell could very well stop there. If it's been making fifth wave, 1, 2, 3, 4, 5, so it could very well be terminating in here. So once again, if you are buying historical highs and if you manage to buy what is about to be a long-term market top, then guess what? You've been buying the market top, which is the most stupid thing you could ever do. Okay, so buying right now is totally out of context. Even though if you think you're following a trend, you're not into trend trading right now. We're in the end of the trends, and being a perma-bullish is the most stupid mistake you could make out there. Right now, you need to be cautious. That is what you need to be. Okay. Then you can try to be aggressive like I am, but even I, a professional, are having quite some troubles identifying what the market will do right now. Because it's hard to trade. So be aware of that. If you're a beginner, don't trade those markets right now. Don't try to sell them. Don't try to buy them either. You just do nothing and wait to have price really confirmed. And at that point, I'll be myself showing some much more confidence in the scenarios I'll be pulling out there. Because right now, I tried my hard. I tried hard and I do my best to share my feelings with you, and the current markets are really tricky, hard to trade, even for a professional. I've been trading for 8 years, and this is the hardest times I had forecasting the markets. Regarding the equities, okay? I think gold is pretty crystal clear. VIX is totally manipulated, but that thing is not going to end well, and it's going to be really not pretty when this will go wrong, but probably not for now. Junk bonds, pretty easy to identify once again. 10-year yields, have been making quite huge trades on those, pretty nice trades in here. We're going to talk about gas, the ENG gas right now. We'll see how this thing goes. We're back to 50% of the trend channel, so this is what I've been telling you guys lately. I'm buying, once again, that thing. But I'm doing cautiously. Okay, I'm not really sure that this thing is going to break up. Obviously, if we make any closes below that 50% channel, mid channel in here, then I'll probably trigger the stop losses and get out. Okay, but I think that market is just oscillating bullish, bearish until we get to only bullish, and whenever we'll have that, I think we can have a 10% return in a few hours, and I don't want to miss that. So this is why I keep on being exposed, but not with leverage on the gas, waiting to potentially have a 10% up move. But of course, that's at the risk of taking a loss of 1 to 2%. Gold, we've been talking about that. Euro USD is doing pretty well. Look at this on the weekly chart. Okay. So that was the scenario, but right now we have a pretty great candle, bullish engulfing out of a pretty nice lower week candle, doji right on support. So this is perfect scenario. All the stop losses are there, mine included. I'll take first profits in here and probably going to buy the retracement next week to extend to a B2C wave. Okay, so if we have a look at this on the 2-hour chart time frame, this is what it looks like. Okay, so I consider taking partial profits probably right there. Let's say 1.18. It's probably where I forecast to take partial profits. Not right now, still in a bullish oscillation, so I'll wait to have the next bearish cycle to trigger whenever I'll have it. Okay, because have a look at this. We've been breaking that cycle down, which means that we will have a pullback and probably one more push to the downside. So regarding this, I'm not aggressively bearish, okay? Not aggressively bullish. We have a big resistance in here. I hardly see the price getting further away from this. We're already overbought on momentum, so I'm only waiting to see sine wave getting into bearish cycle, and I'll probably trigger my taking profits. GBP USD as well, same thing on the weekly chart. We've been making bullish engulfing out of a lower week shadow candle. Same thing goes there. I have a first taking profit in here, second taking profit in here to find the A point, and then I'll probably rebuy the B point pullback for a B2C wave. Same scenario, Euro USD, GBP USD, but I got much more confidence in the GBP USD to be a nice performer in the next following days. Euro yen, still waiting on that one. It's going to be nasty as well. Whenever the equities will go pretty bearish, as you can see, we've got wave 1 to 4 overlap, which means we're going to have extended wave 5 down the road. So I'd like to be in that one. So I'm ready to sell Euro GPY pretty soon. We have a tiny resistance in here, which is the overlap. So I'm ready to get in. We've got momentum confirmation, so I need to have candle close, and I'll wait to have a bearish engulfing. Okay, so I'm going to put the alert right in front of you using pro alerts. Okay, so I want to have the close being below the previous low. Okay, low -1 mean low of the previous candle. I don't want to wait for the bar close, and this is how we do it. Creating the alert, searching for pro alerts light, custom pro alert, and I want short Euro GPY. Okay, so it's on the 2-hour chart time frame. I want to trigger it only once. So now whenever I'll have a bearish engulfing out of not necessarily a bearish engulfing, I just want a candle that breaks down the previous candle's low. Okay, it's simple as that. Whenever I have it, I'm getting back in with the euro yen. I think that thing is mature. We've been retracing 2 waves. It's pretty great. We are right in timing to get to the wave 4, so I think we're ready to get to an extended wave 5. So let's calculate the potential targets we will be forecasting. So extended wave 5 is generally 161% extension to 200%, and we do it. We have it as well in here, so probably going to target there. Okay, so right here. This is where I've got my target. Okay, so not necessarily 200. We're going to see if this is relating to any support. Okay, this is where we go, definitely. This is definitely where we're heading. I think this is the price right here. This is where I'll put my final target. So maximum target is right here with the euro yen. Don't target below that. This is where I want to take my entire gain. So as you can see, it makes a pretty drop. makes a very nasty trade. I'll have partial taking profit in here on the previous bottom and in here as well to trigger partial takings profit. So first taking profit will be there at 127 extension, second one in here. Okay, so I hope you guys understand how this is going to be playing out. We got target 1 right here, target 2 in here, and target max right here. This is where I'll take all my gains on that wave to 1 to 4 overlapping. So once again, having the euro yen going to the downside, as euro still has some potential, it's probably that both euro and the yen will trigger, and if the yen is triggering, it means that the equities are to the downside. So this is one more thing that suggests, once again, I don't have the timing. I don't know for sure that this is going to be right now or tomorrow or whatever, but normally this should be sooner than later because we have all the signals at the same time. Euro yen is retracing back to really interesting selling entries level, and I think that's what will trigger. AUD NZD, pretty nice in here as well in the 2-hour chart time frame. Let's see how this goes. Okay, so option number 1, it's either this is a wave 1, okay, but we have to go higher than the B point. Okay, so probably going to get there, I think. And this is where I'll have partial taking profits on the AUD NZD. Okay, just in case we made ABCW, ABCX, ABCI, and in that case, that's a scenario you don't want to miss. Okay, because it's possible as well. So we could very well have that pattern to trigger. Okay, and in that case, we'll extend to 50% retracement and wave 1 overlap. Absolutely possible, once again. It's just that this is not something you want to miss. Okay, so please be patient right now. I'm not quite sure that we've already consolidated enough. Okay, it can take quite an extended period of time regarding AUD and NZD, so don't be too aggressive buying right now. Consider that you need to secure those trades below resistances. This is only whenever we'll break the 3 points that you'll be sure that this was the bottom. So for now, not necessarily going to be the case, so remaining cautious in here. Regarding the equities themselves, I have really interesting things to tell you about today. So Amazon, we need to have a look at this one. Have a look at the daily chart. Absolutely a bubble. Okay, don't need to talk it through. So we've got options. Okay, in here generally, as you can see, we need to find a structure. Okay, this is the bubble, so we need to find some prices we could eventually try to short on that market. If you have a look at the upward moves, we already do it in 2 waves. 1, 2, 2 waves to the downside, 1, 2 waves to the upside, 2 waves to the downside, and potentially 2 waves to the upside. So this will be an ABC underlying structure. Let me highlight that for you. So this is what we'll have right now on Amazon. Okay, and generally ABC is 100 to 127% of the previous impulse, which means right here we're on a target on a bearish cycle. So question is, how do you do that? How do you trade that? Meaning that that cycle is an exit. Okay, so that's exit. But you have too much overbought, which means you need to be patient in here and wait for a support to break down. But whenever you have a breakdown of a support, this could be the end of a bubble. Okay, meaning the highest point we could get on Amazon for probably years, because if this had to be the historical high, then I think if we are breaking supports down the road, we're triggering a crash on that value, and we're probably not going to get to the valuation until a few years, which means at least 4 to 5 years before getting back to that price eventually in the future. So be really cautious if you've thought about buying Amazon. You're really buying very dangerous pricing. For now, the momentum is heavily bullish, which means it's way too dangerous to consider being a seller. So you need to wait for the momentum to trigger another pattern. Okay, we could eventually, on some extended cases, go to 161 extension. So this is where I think we need to have a look at Amazon. Okay, if it goes to 1751, then I think this is where we can terminate this. On a bullish extension, went too far, correcting, and if we have daily bearish engulfing in here, I'll be ready to take as well. Okay, so be really cautious in here. Really, really cautious. I'm going to put an alert in here as well. So I'd like to see, why the hell don't I have that? Well, anyway, that's the same thing, so we're good to go. I'm going to create an alert. Same thing, alert slide, custom pro alert, short Amazon. Okay, so this is the way I'll play it. I want Amazon to trigger a bearish engulfing pattern, so breaking the previous day's low. Whenever we do it, if it does that, remaining below 1760, then I'll be ready to get to a long-term shorting of an Amazon. So this one will be the last big market cap entering into my portfolio, as I already have Tesla, Apple. Don't yet have Google, but I don't necessarily want to have that one. I already have Facebook, Nvidia. Netflix got stopped out, so I'm going to probably take this one as well soon. Need to have momentum confirmation. We're skyrocketing the momentum, so there's nothing to short right now. But once again, if the equities are falling apart today, all we need is a reactivation candle. So if I have some kind of bearish candle terminating minus 4% today, of course that means Netflix found its historical high, and I want to sell that one as well. This one obviously is a bubble as well, and just to set things straight, okay, whenever I say this is too much, this is not normal, whenever I say that value has to retrace 40%, then guess what? It's just getting us back to the early prices we had at the beginning of that year. So does that really sound the big of a deal, losing 40%? No, it's just that this is totally out of sense what we've been doing lately. I'm in a logarithmic scale. Let me just put that out. Have a look at this. This is really a fucking bubble. There's no other way to call it. So if we found the market top in here, then this is a market crash that's going to occur right after. I'm probably going to fuck up 40% of the valuation. Pure and simple, simply applying the strategy here. Need to be patient on Netflix, but that one is going to enter pretty soon as well in the portfolio. So right here we had, yes, in terms of structure, we've got wave 1, 2, 3 equal legs. So we've got wave 5 to be extended wave. So it's minimum target 161%. And we're already there. So next target is eventually in here, $375 if we get there as well. If a bearish signal is triggered on momentum, I'll take it. Okay. This one doesn't really get any interest. So okay, so it's finding a resistance in here. So any momentum confirmation will be taken at a short entry in here, just to fuck up those, to blow this thing. It really it's going to blow, and that's how I think it is. So the entire equity market is about to fall in the U.S. equities. It's just a matter of time to me, just being cautiously patient, to have signals and to see those signals confirmed. Whenever they will, I'll get into reinforcing my short positions on all the assets we've been talking about. The US equity, the indexes themselves, going to reinforce the VIX, probably going to reinforce the gold, probably going to reinforce the euro-yen, reinforce Nvidia, Netflix, Amazon, Boeing, Facebook, Apple, Tesla. Got all those in portfolio. Okay, let's say this is all I have in portfolio. The yen index, I'm going to trade it regarding the euro-yen. USD MXN, I don't really want to trade that. This is what I have in portfolio. Don't no longer have US oil. I got gold, gas, got Bitcoin, I got 10-year yield. Yeah, I still do have that one as well. Started to trade VIX, HSI. Yeah, I do have all those. And I've got Euro stocks as well. So this is all I have in my portfolio right now. This is all I'm currently trading. Okay, all of this is in portfolio. I got General Electric as well. And probably, let's have a look at Google. See if there's something to trade out of this. And yeah, probably there is. Yeah, there probably is. As you can see, we've got A, B, C structure. We're tracing here to the B point. So this is WXY structure we have right here. I'm going to see if we reached out to the extension targets. Perfectly, we did. So right here, we're going to try to find a resistance and find a trade in Google, totally confirming the resistance in here, so we could go slightly higher. We're already in a bearish cycle, so this is where I think we should trade. So Google, for example, it's 11.49, let's say 11.50 is the price. Google could be considered short. We're already into a bearish signal in here, because you can see this is the candle that has been detected overbought, and the price remaining below this one for now. But we haven't tested the resistance yet. Okay, so I think the price could go slightly higher than that, and I'd like to see another or either overbought pattern or taking profit pattern, whatever. I want to have a momentum confirmation in here, and I'll be ready to get into shorting that thing as well. So Google still has a tiny upward potential. Okay, so waiting to see this to happen, happening, we need to see if we terminated the oscillation in here. So yes, indeed, we're building a wave 4 in here, temporizing, and probably have one more upward push on Google before getting into shorting this one. The stop loss will have to be set above there, so above the previous high, so stop loss is there. Bearish entry will be there. Upon signal, of course, need to have a signal, no trade. This is where we'll get to validation, closing the gap and going below. Okay, if we close that gap and price are moving below, this is where we get to validation. This is where you put stop at break even. All right. And then you do no taking profit. The value as well is going to fall apart just like all the other big market caps. Okay, so this one hasn't that much of a bearish potential, because as you can see, this one isn't a bubble. Okay, Google isn't going parabolic. It's just moving inside a channel. So all we can target in here is going to the bottom of that channel. So don't be too aggressive on Google. Okay, it's not going to trade just like the others. The trend in here is solid. The trends we installed in Tesla, Apple, all those shits is parabolic. So this is not going to end well. But Google, I think, is not the one you want to trade short with heavy retracements. Okay, the best is where you can get is there. I don't target anything below there. So to me, that trade will be pretty simple. It's target number 1 in here. I target to break one support, but that's all. I think we're not going to get further than that. So this will be taking profit number 1, and that will be a 75% taking profit in here, okay, and eventually target number 2, but that will be maximum target to me. I don't target below that. To me, Google is still pretty positive, and this is a strong trend. This is not something you can reverse, okay? This is something that is probably going to keep on going up, or at least range all way down, okay? So it's probably retracing on that 120, and at best 30%. I don't see the price getting further below than that into Google. Okay, so let's set things straight. Apple, Tesla, all those shits are going to lose 40 to 50% of their valuation, probably not Google. That's how it goes. When you build the price, when you build supports, and you have volume supporting the price. Look at the volume. This thing is just perfect. I'm ready to buy Google, even if we were in a recession market. I think that asset on support areas is really something I'd like to buy. As you can see right here, investors are not fearing. When you have fears, you see very low retracements. So this is really something that the guys are holding, and so will I, okay? So of course I'm going to wait to have bidder prices to buy, but I'll buy it definitely. Anyway, that's it for today. I wish you guys a pretty nice day, and see you tomorrow.